Good morning, guys, and welcome along. It is 9:48 a.m. on Friday, the 17th of February 2023, and as you can see, I've got our normal market view displayed on the screen here. So currently we're looking at a 1 week time frame, and as we've said multiple times before, this past more than 12 months now actually has been a bit of a roller coaster on the S&P 500. So never really breaking above about £68 and at the current time it's not there either, but I believe we are seeing some green shoots. Maybe I should say some blue bars. Let's just try to adjust this a bit, just to sort of let you see the pattern a bit better. So this is how it stands. Our current market value, if you like, is the blue bar. Current average price is the green dashed bar below, and the difference between the two is our profit and loss. or the return actually, as it's phrased here, currently sitting at 3.3%. As I mentioned in the description for the video, I think that's exactly the same actually as this time last week, or 10 days ago. It was actually the last time I was able to do a video. So not a lot has changed. However, on the other side of that, I view that as a positive. We are not seeing the same sort of volatility as we have seen some other times. I mean, if you look at the direction of travel of this here, you know, it was up, and then it was up more, and then it was up more again. Just looking at the way that went, there was no way that wasn't going to come crashing back down at some point. So, you know, this more kind of steady growth that you see some other places, this is a lot more like something that looks sustainable, something that looks real, for want of a better expression. So bring that back down again. I will just highlight again for you where I see the trend line. I believe the trend line runs on this trajectory. As you can see, I've marked it. And if there hadn't been the war in Ukraine and all the other shenanigans that have gone on, I would have expected the S&P 500 to be around about 78, almost 79 pounds on this scale at the current time. I believe the gap between the current market price and that point is what I call the opportunity cost, and I believe that you would be buying at a sale if you were to buy anywhere in that gap. However, as it is, the conventional wisdom is that you are best to buy consistently and regularly, which is what we've been doing. That has given us a dollar cost averaging effect, so even though the market is currently not as high as it has been, we are still in the green in terms of the return. And I'm going to keep doing that. We're just going to keep investing. Now, bear in mind, I suppose, while you are in the wealth accumulation phase, which is where we are now, while you're growing your portfolio, each time you buy, you will be slightly adjusting the average purchase price. And if the market is going up, you will be slightly adjusting the average purchase price upwards. Okay, so you will not see just as much of a return as you would if you had ceased investing, because of the fact that you're constantly adjusting the current average purchase price. However, I suppose if you refer back to the other figures that relate to this time a week, a month, 3 months, 6 months, and a year ago, you can see compared to what the market was doing at that time, you can see how much the market has changed since then. So if we, in fact, just went out, I've mentioned that on the week we are currently sitting up about 0.75%. So that's compared to this time 7 days ago. As I say, I think it was 10 days ago was the last time I did a video, so that's why there's a difference there. It's not zero compared to 7 days ago. It's up 0.75%. So compared to this time a month ago, we're up almost 5%. That's a bit much, really, given that normally we expect to see around about 10% growth per year in the S&P 500. because of the roller coaster thing that you can see there, this all these figures are kind of a bit academic really at the minute. We haven't been operating in normal market conditions, and that's why you're seeing basically the same figure for a month ago and a year ago, and then obviously a negative for 6 months ago. So as you can see, the market has pulled back has pulled back 0.75% today. I'm not concerned in the least about that. We are heading towards the weekend. Markets will be closed during the weekend, and there are a number of quite a number of, I don't know if they're institutions or if they're day traders or what they are, but there are people who just simply will not hold over a weekend, and I would imagine a bank holiday, if there was to be one, would make them even more nervous as well. I don't quite frankly understand how those people sleep at night, from the point of view that I just think they must be very anxious people. I couldn't work that way. I do remember in the earlier days when I had started investing, I do remember checking the market daily, maybe even hourly sometimes, during the opening hours, and having to realise that that's not useful at all. You really shouldn't be looking at the market. I would say you shouldn't be looking at it on a daily basis. Weekly is probably even a lot, except for if you haven't automated your investments, and you have to do it manually as we're doing here. But it's one of those things that I think it takes time to realise and appreciate. A couple of times a month, I would have thought should be enough to keep you abreast of what's happening. By all means, if you want to read the financial press, take it with a pinch of salt. Keep investing, because that's the proven strategy, no matter what anybody else says. So I'm going to go ahead, guys, and we're going to buy our weekly £120 worth of shares in the Vanguard S&P 500, shown here on the Trading 212 platform. As you can see, for that value, we should be picking up about 1.85 shares. Let's review the order. Just a reminder, we are trading during market open hours. So this is going to be a market price. I'm not using any limits or anything like that. I'm just trusting the market to find its level and to give us a fair price. That has gone through. I saw things jump around here, so I believe this has updated, and so that has, I don't know if that itself has affected the return. It looks as if it has very slightly. Anyhow, our average purchase price is now £62.63. Our return is moving about let's say 3% as things stand, and we've currently just under 5,700 in our portfolio balance. Let's have a look at the notifications on the right. I see we've got quite a few. Obviously one or two of those relates to that purchase. So there we are, we got 1.856 shares. There's information here about biggest stocks before earnings, Dropbox and so on. Shopify sinks 13% in response to underwhelming revenue forecast. Don't even know what that is, to be honest with you. Roku I have heard of. They're up 11%. Good news for them. CNA, Centrica up 4.5%. Profits soar to record high. Centrica, I think I did hear mention of them in the news yesterday. I believe they own one or more of the energy companies. I don't recall whether it was gas or electricity, but they were taking a bit of heat in the media to do with them profiting while end users are finding things difficult. The point was made, however, that Centrica is a big group, and I think for the energy company that had end users, they actually did make the point that their profits were, was it half what they had been a year before, thereabouts. Nevertheless, it has been suggested that the chief executive might wish to forego his bonus. We'll see. Watch this space, as they say. If I was a chief executive, I don't think I would be too willing to forego my bonus if I felt I had earned it fairly and all the rest. So what else have we got here? So some of those I've just mentioned. Roblox surprises, apparently. Roblox soars 23% as earnings release shows bookings beat estimates. I'm not sure exactly what that is referring to. All I can really say is that I have 3 kids. They all like to play on Roblox, and even just yesterday 2 of them are on holiday abroad, and must have connected because the third one was exchanging messages internationally on it, so it's good for that too. Taiwan Semiconductor Manufacturing, so that's TSM, they're down 5% as Warren Buffett cuts Berkshire Hathaway's stake.